Hi, everyone. Today, let's wrap up the week of trading. Again, talking about the potential government default. Then we'll go over Max Payne just because it was right on the money. And then we'll finish up with the charts, as well as my results for the day and my thoughts going into the Monday session. Don't forget to check out the Patreon as well as the Twitter. You can see here in the early morning session, we talked about the DXY potentially breaking out and creating some lower lows here in the SPY. And we'll take a look at that in the market session. You can see that was posted 10 hours ago. And let's see if that panned out. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So they say if the government can make it through June, that we should be able to avoid default in July, which is kind of like saying if we don't run out of money in June, then we'll run out of money in July. Not sure how this is revolutionary, but they did put out some new estimates here. So they say if they can make it through June based on revenue from taxes that are coming in, then they should be able to finance the government at least through the end of July, which does give us a little bit more time for Congress and the White House to come to some kind of consensus in order to raise the debt limit and hopefully figure out how they're going to spend less money in the future. Moving over to Max Payne, you can see Max Payne was 410 and the closing price was 410.88. So pretty much hit it right on the head where Wall Street made the most amount of money and investors made the least amount here on options. Just slightly higher than 410, but not all the way down here to 411, right in this sweet spot where all these puts end up worthless and these calls only make a little bit of money as there are much less of them. So good day for Wall Street, bad day for options buyers. And that's why we use this as a tool for our day-to-day trading. Moving over to the charts, starting off with the dollar and the SPY like we looked at on the Patreon. You can see we took that picture right about here, and we said if the dollar continues to rally as it had already broken out, that we should expect markets to go lower as these generally have an inverse relationship. And sure enough, we had a high in the pre-market, and then we sold off basically throughout the day here. Did get a little bit of a pullback, but if this dollar continues to look very strong, you should expect that the S&Ps are going to continue to pull back. It is a little bit overbought on the smaller time frames, so we might see a little bit of a pullback, which would allow equities to rally a little bit. But this is a great example of some of the things that I post on my Patreon. Moving over to the NASDAQ here on the 15-minute and the daily chart. Similar thesis, we broke down really strongly, got my level of support as well as the 200 SMA. And then once we started getting into these lows here, you can see some divergence setting up. So you have that initial low, and then that lower low setting up here, you have RSI of around 27 or 30 versus the RSI that you had here at 22 and then 29. But we had lower prices, so you can see clear strength. And we ended up getting a nice follow through into the end of the day. And at this point, we could go either way. It does look like we're selling off a little bit, and we are below my resistance lines here on the shorter time frames. We have lots of bullish volume at the end of day, so maybe we see just a slight cool off. If we get a higher low setup on Monday, that would be interesting, and then we could see some higher prices. But if we remain below these levels at 324.60, then we could see this continue lower into Monday. And then looking at the daily chart, this is definitely a hanging man candle, and it looks pretty weak. So overall, I would expect this to potentially go lower on Monday. Moving over to the Russell and the Dow, you can see the Russell continuing to go lower, but it is riding this trend line of support. So still bearish, but still bouncing off of support. Overall, bearish going into Monday. Looking at the Dow, similar thesis, continues to bounce off of the 200 SMA on the 4-hour chart, as well as this 332.44 level. Does look like we might go below that here in the after hours. And if we do get below that, I'm looking down at 329.40. Moving over to Apple and Tesla, you can see Apple broke down from this level. So we have a bit of a double top now. We haven't taken out that midpoint yet. We wicked this support line. And this could certainly turn up from here. It's still in a very bullish trend, but we might see a shorter term pullback similar to what we saw going back to the beginning of May, where we cut all the way down to the previous lows, testing that 55 EMA, which is currently sitting down at 169.70. Momentum bearish, RSI bearish. Moving over to Tesla, got very close to our price target here, 177.70. Came up just a little bit short and then broke back down to our next level of support, and it's holding above that level just a little bit. So still in this zone, expecting this to hold, and still expecting a retest of this 177.70 level. Moving over to top and bottom sectors for the day, you can see oil and gas actually was the top performer here today, coming off of this double bottom. We called this rally. We expected this to come down and retest this low, and that is complete now. And at this point, you can see some divergence forming between these lows. We have similar prices, but higher RSI, just like we talked about on the NASDAQ. And if this starts to follow through here, we might see a push up to 124, which would be a nice couple dollars of upside. And then the weakest sector here was discretionaries. We continue to wick these highs. We talked about this being kind of bullish, and it still does look a little bit bullish. Just hit this resistance level, found that initial rejection. We're at support, and as long as this support holds, you could see this breaking higher and continuing to make new highs. But you do have to respect the down move that we had today. 0.85%, not a huge move down, but definitely respectable. And moving over to consumer staples and utilities here, staples ended up getting the follow through that we talked about, and then we gapped down massively here at the end of the session. Very strange. And you can see that even closer here on the 4-hour chart. Area of highest volume, gap down big. See what happens here. We're still consolidating right on top of all of these EMAs. I'm still expecting a little bit of downside here on staples. Staples, on the other hand, rallied into the zone. We kind of have a midpoint. Looks like we're setting up a lower high. It was one of the better performing sectors on the day, and it does look slightly bullish going into Monday, so keep an eye on this. If it takes out this previous high, then we have to reassess the thesis. So short-term bullish, but still looking to see if this is going to be a lower high setup. Moving over to high yields and TLT, you can see high yields came up to this resistance point and then broke down significantly, still respecting this downtrend line, still expecting this to break lower, which overall would give us lower prices across the major indices. TLT, on the other hand, continues to chop sideways. We hit this area of highest volume up here at 105.30, rejected from the point. Now we're still above VWAP and above the 9 EMA, so I think this is just a shorter term pullback or a setup of a higher low and then a potential push higher. Certainly possible here. We are kind of wedging a little bit, but overall I would expect this to rally off of VWAP. Finishing up here with the VIX and the bond volatility index, you can see bonds moving lower, indicating potentially some bullishness. VIX, on the other hand, continuing to go sideways in this zone, threw some wicks early in the session and then sold off. Again, you could look for a higher low setup, potentially get another move like we did here on Thursday. But at this point, you're definitely chopping sideways, hitting resistance and selling off. So looking at my results for the day here, up 182, nice little profit. I had some 320 puts, 322 puts, 323 puts, put those in throughout the day. Ended up making money on those. 327 calls, sold those early in the session as well, made money on that. In my IRA, I sold some 322s for Monday, have some decent profits there as well. And then 321s for Monday here in my individual account, as well as some 322s. Those are doing well also. 326 calls at $76 profit already. And then actually out to Tuesday here, I have some 321s and 327s. Puts are doing well. Small loser here on the call options. So overall, still slightly bearish, but mostly neutral. Let me know down in the comment section what you think of the default crisis, or should we generally just stop talking about it? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.